Welcome, everyone, to another edition of the Industry in Transition Zoomcast. We have Steve Sanders from Interactive Brokers with us today. He's the EVP of Marketing and Product Development. So we're very happy. We've had this before conversation. We've done this on just voice only, so podcast before the Zoom world came in.
So thank you for having me back, Tony.
You are welcome. Very interested to get your take on a bunch of different things. I mean, obviously, we're coming out of a heck of a year. We've had this pandemic, and just give us a sense of how Interactive Brokers did, during the pandemic and throughout. I mean, I guess one of the benefits is you're a heavy tech company with some fantastic technology. That was probably a benefit.
Yeah, so we actually did very well during the pandemic, and we continue to do well. Growth has been over 30%. I think in the last few months, it's more like over 50%.
Wow.
So we certainly can't complain. I mean, a lot of this is due to more people having more time at home, and also the fact that our broker is international and we have clients all around the world. So that certainly has helped us also.
Yeah, I want to circle back to the international thing at some point, but in terms of anything that you can see, just in terms of lessons, things that you learned maybe during COVID that you're going to keep going forward, is there anything that sort of stands out to you in your world?
No. What I would say is that the things that we've had tremendous account growth. So certainly we had to ramp up customer service to support all the new accounts.
Yeah.
We now have over 1.5 million accounts from clients in 200 countries all around the world. So certainly that was a big thing for us. But other than that, our systems were built out to be automated and to be online. So other than the customer service, which we struggled with a little bit in the beginning, I think we were pretty good to go for this pandemic.
So other than now that we're coming out of it and you guys fared pretty well, I think our industry has been pretty resilient all around, through it was sort of, we fared pretty well versus other industries during COVID. But there are some unknowns out there. There's, regulation that advisors are looking at. There are some, potential headwinds. I think we can pat ourselves on the back, say COVID, we did pretty well. And a company like yours, really tech forward, I mean, obviously had an advantage, but there were unknowns. They're debating taxes right now. It seems like, no matter how you slice it, capital gains and things like that, and a stepped up cost basis, that's, a direct tax on investors.
Yes. So to me, for our broker, it's really about two things: technology and keeping up with the regulation. And for us personally, not only do we have to keep up with the regulation in the US, but we have to keep up with the regulation all around the world. So certainly taxes, nobody really knows what's going to happen. It's all in flux, but we built all the tax reporting in-house. We've never outsourced that. So we certainly are aware of it and are experts on it. And whatever is thrown our way in terms of, maybe taxes on unrealized gains or other things, we should be able to handle pretty quickly, given that this company is all about our technologists and our ability to keep up with the compliance. So we don't see an issue, even though there is a lot of volatility around what's going to happen.
Right. And obviously you mentioned regulation, and part of the things, when advisors look at the headwinds in front of them, the things that could potentially hurt them, everybody wants scale. So you guys have scale. You're one of the largest, so scale, but can I get the scale, I get the technology, but am I on my own in terms of other things like the regulation stuff?
No. our broker services individuals, advisors, brokers, and hedge funds. And we, we have to build this all out for our individual clients. I mean, we just can't leave them on their own. So what we've tried to do with the advisor business is we've tried to build everything in-house so that when we have to add something or change something, it's there. And that includes both the tax reporting, the compliance, the new compliance rules that we might have to look after. Our customer relationship manager is built in. Our portfolio management system is built in. We really offer a turnkey solution.
Tell me, you mentioned portfolio management system. Tell us a little bit about that, because that would seem, that's sort of also beyond technology too, right? I mean, there's advisors are all looking for that too.
Yeah, so we built our own, started building our own years ago. It's called the Portfolio Analyst. It allows you, what's beautiful about it is that it will take feeds from other brokers and banks so you can get a complete picture of the advisor client, and an advisor may keep a couple of accounts in different places. They may, do crypto with us and futures with us and stock with another custodian, and the portfolio analyst will just roll it up. So what we've built into this is the ability to be able to consolidate all your assets from numerous places, as well as some very sophisticated reporting. And our last endeavor was to meet the GIP standards, which the CFA puts out. So advisors don't have to worry that we're making up the returns or using our own methodology. It's standard.
So, well, you mentioned a bunch of things that I'm interested in there. One of them is, and if I'm an advisor sitting at a different place or a different custodian, you mentioned crypto and the ability to work with it. I mean, that's something that, look, it's cutting edge, right? And it's also something that creates some anxiety. And but at the same time, people want access to it. So how does that work with you all?
Yeah. So we just recently introduced crypto for advisors. I think we're really the first big custodian in that space. And obviously we've been getting a lot of demand on it. So an advisor who may have a business at another custodian where they've been trading stocks and ETFs for years could open up separate accounts for their clients and trade crypto, as a portion of the portfolio, as a diversification strategy. Keep the crypto at Interactive Brokers and keep what already exists in terms of stock and ETFs at the other custodian. And they can run portfolio analyst reports that will put the two together so that when the client looks at what their performance is, they will see it across both custodians on one report.
Yeah, that's fantastic. Now I'm assuming what's interesting about that is, using Interactive Brokers, because you do some things that other people don't, and it includes the foreign stuff. You mentioned a couple of times you have, overseas offices and stuff like that. And that is a real tight spot for a lot of financial advisors. A lot of the big firms won't touch it anymore, or are moving the brokers away, from just actually telling them to leave, or they can't do this business anymore.
Right. So worldwide business is very important to us because not only for US clients, but also because we have clients, which includes advisors, in over 200 countries and territories around the world. So it's always been important to us. So an advisor in the US on behalf of a client could open up an account in USD, and if they wanted to trade Hong Kong stock, they have two choices. They can either convert that USD to Hong Kong dollars and buy the Hong Kong stock, and we convert at the very best rates because we get direct interbank feeds from the largest banks around the world. Or they could take out a margin loan. They can borrow on the US dollars, Hong Kong dollars, and then buy the stock by taking out a margin loan. So it all depends on what type of currency risk that advisor would want to take on behalf of their client. They can go either way. But in either case, whether you actually convert the USD to Hong Kong dollars or you use the US dollars as collateral on a Hong Kong dollar loan, it's simple to do on our platform, and everything is included in the same account.
And the same reporting, right? You have the same
And the same reporting, exactly, both on our statements and in the portfolio analyst.
All right, so I'm going to keep going down this rabbit hole with you. Commodities, gold, stuff like that. Is it the same?
Yes, we just introduced.
I'm just trying to bring up things that people don't do elsewhere, or they have problems with when they try to do it.
Yes, so we just introduced gold this year. Certainly, we offer futures and forex and bonds. We have a wonderful bond platform with probably the largest electronic inventory anywhere. Funds. Any advisor can trade these things on behalf of their clients. Very, very important to us to have all these asset classes. What's interesting is that there have been a few Bitcoin futures out there for a number of years. The CME offers them, including the new micro contract, which is a much smaller contract. And I think everybody has just read about these new ETFs that hold Bitcoin futures. From my point of view, I would think people would want to hold the Bitcoin futures directly rather than purchasing them through an ETF and save the management fee. But that's just my thought on this.
What portion do you think of? I mean, because it seems like that makes sense. I mean, if I'm from a business standpoint, from you want to get, hey, look, give us 10% of your portfolio that you're trying to leverage, or try to do some other, hedge versus some other traditional stocks and bonds, and we can do all that stuff for you. And then the hope is they move their regular business too, right?
Well, sure. We would love to get all the business because we think we do it better. But you know what? Sometimes, repapering and moving assets is a hassle for the advisor. So we're happy to do it either way, either by getting a portion of the business, or hopefully they really like what they see when they do a portion and move more over, and maybe move the whole account over. So we're flexible.
In terms of going forward, I think that this is something that RIAs are taking a hard look at. They want to expand their horizons. They want to expand their product mix. Clients are starting to ask for this. If they need to find out more about crypto in general, do you have sort of resources for them to sort of take a look at this stuff, education wise?
Yes, we have our IBKR campus, which includes the Traders Academy. It's all on our site, ibkr.com. The Traders Academy offers over 50 courses. Courses have a bunch of lessons and quizzes and tests at the end on all kinds of subjects. And one of the courses is on crypto and the whole background on it. So anybody who has any interest in crypto, I would encourage them to go and take the course and get the basics.
Yeah, and that's critical, I think, for advisors as they're moving forward, because they're getting asked these questions, and they're trying to figure out what's the best way to position their clients in their books of business. What do you see going forward? I mean, this is obviously you've taken advantage of the fact that other folks are not in so much of the crypto, the gold, and all the different international pieces that you guys are doing. You staked out a big claim there. What do you see going forward for you guys?
Well, I think we're going to continue to focus on our 3 competitive advantages, which are cost, which means commissions, as well as financing rates and execution of trades. I mean, certainly that's in the news. We don't know where payment for order flow is going to go, and You know, with our broker, we took it down the middle. For those who want, you know, to use our smart router, we charge a very low commission and you get best execution. And then we do it like everybody else, where we sell the payment for order flow and it's commission free. So certainly we give the choice, and if the regulators decide they no longer want payment for order flow, it's probably going to migrate, you know, back to the smart router, that, you know, for everyone. So we have that breadth of product around the world. If there are any other products we're not offering, or if we get demand on products from people that we're not seeing, we will add them, whether it's new asset classes or expansion of an asset class. And technology, the tools that you know, individuals and advisors need, like the portfolio analyst and you know, our trading tools that we offer and our risk tools. You know, that's the third competitive advantage, and certainly will continue to improve our technology.
You mentioned in there the margin rates and doing margin. You know, obviously that's also a key piece of business going forward, and it's competitive, right? So rates, people shop rates and try to get the best for their clients. How do you guys approach that?
Yeah, so we are a lot lower than the competition. It floats based on Fed funds. Right now, I think it's from 0.75% to 1.59%. Most other brokers are charging 8 or 9% on margin loans. So that's significant. The other thing I'll mention here is short selling. If an advisor needs to short sell, you know, generally it's a pretty opaque business on the street. You have to borrow the shares, and then when you get your statement, you see how much, you know, you have to pay for it. With us, we have a tool that shows you what the inventory is that's available, because obviously if you can't locate the stock, you can't short it, and what the indicative rate is. So that's another key tool.
Yeah, well, look, we've been working with you guys for a while. I love the transparency, and I love the technology, and you know, especially the product selection. I think it's a, you know, I hear from advisors all the time, you know, they want to do crypto, and especially on the international piece, they're just looking for a way to do it. So I think it's great that they have an option. You know, I'm glad you're not keeping it a secret. We're telling everybody about it. So that's all, so that's all good. I appreciate you being here, and we'll do it again. I'm sure we'll see more of you.
Great. Thank you so much, Tony.
Thanks a lot, Steve.